From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 22nd, 2016. In just a moment, we'll be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. But first, I want to recap a couple of the trade suggestions made yesterday. First off, starting here on the USDJPY, the US dollar, versus the Japanese yen, the suggestion was to sell on a rally into the resistance zones. So this green shaded area here on the chart, the middle of the chart between 112.0 and 112.40 was the resistance zone that we were looking for resistance and reversal to go back down for the US yen. You can see today that the market did indeed rally towards that green shaded area, the market pushing as high as 112.20 and then finally turning back around. We're now sitting into the 111.60s right now. We've seen it as low on this candle, the low of this candle sitting all the way down towards the 111.37 level. So a significant fall off of the 112 level. So if you decide to go into that trade with me, I entered at 111.95. You could have at least gotten into 112 or 112.05 or even 112.10 on a sell and seen significant profit as it pushed down into the 111.30s. Currently, still holding part of the position here. 111.95 was my entry. Again, we're sitting at 111.70. We're sitting with about 25 pips of profit. Of course, if you have been following the strategy very long, you know that the trade has been taken to break even, and we're waiting for further profit on the trade. So I can't lose on the trade. The trade's at break even. In other words, the stop loss is at the entry level. Can't lose on the trade. If the market suddenly turns higher, challenges the green shaded area again, we'll be out of the trade. Looking to target again the blue shaded area. So we've sold yesterday the green zone. We're targeting the blue zone. The risk initially was a pushback above the green zone, and further profit will be seen if we can get the breakdown underneath the support level at 111 for the US yen. Another trade suggestion that there's a possibility that traders could have taken yesterday after the live trade room was the open and close, the breakout under the blue shaded area here on the GBP USD. We spoke about this a little bit yesterday, looking for a confirmed breakout under the blue zone, open and close. If you zoom it in a couple of times here on the 4-hour time frame, we indeed did get the open and close underneath the blue shaded area, which became the first selling opportunity that you would have seen here on a rally back into the 1.4390, 95 level. So you can see the open and close, the rally and retest, and now the fall all the way back down to the green zone. So if you happen to get into that trade after yesterday's live trade room, of course you've now been able to realize, let's just measure between the two levels, about 120 pips of profit as it fell from the blue zone down to the green zone for the GBP. Next opportunity, I think, will be a rally back towards the blue zone once again for a new opportunity here on the GBP USD. Moving on to our NZDUSD, New Zealand dollar versus the US dollar for today's trade analysis. We have been studying the top of the range, the red circle, the blue box, and the green circle for the past several weeks here in the analysis videos in the live trade room. Resistance at the top of the range, the black box that you see here on the chart. I don't want to go long at the top of the range. That's very discouraging. In fact, for the most part, I'm looking for short opportunities, selling opportunities here for this currency pair. Zooming in a couple of times, you can see the market challenging the past couple of times here into the blue shaded area, into the low 6,800s here for the New Zealand dollar. Look at this pink shaded area. You see resistance, 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 offering yesterday and now today so far. 67.40, 67.65 as support. What we need to see is for the market to actually break back underneath this. Very much like what we just saw on the GBP USD. An open and close under the pink zone gives us confidence that it's going to begin moving lower back down towards the orange shaded area. And you can clearly see that's basically what the market does, bounces between the pink and the orange shaded area back here in history. So if we can get back underneath here, the probability increases of a push back down towards the orange shaded area. Again, I don't really feel like going long here at the top of the range is a good idea. Buying towards the blue zone, I think you have limited profitable opportunities, but selling rallies to resistance, which is of course the blue shaded area, breaks of support, which is under the pink shaded area, become the opportunities from the top of the range. Likely all that changes, of course, if it ever breaks back above the range, likely getting above 6,900, all that changes. But for the time being, I'm looking for selling opportunities for the New Zealand dollar targeting back down to the 6,600 level or lower, the bottom of the range sitting down here into the 64s, but definitely looking for that opportunity on the breakout. 4-hour time frame, again, we have not seen the breakout underneath the pink shaded area yet. We do see a little break under this period of congestion, which might be interesting as the day goes on if we see continued hold underneath this little area of congestion right here, somewhere around the 67.60 level. So watching for opportunities to go short, not there yet, but looking for those opportunities to target back down to the 6,600s for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.